Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another session of Charts in Action, where we're going to be looking at analyzing and evaluating the S&P 500 and looking at potential trade setups that traders may look to take into consideration just before the CPI announcement. Now, when we're looking at the S&P 500, we can definitely see it has been increasing in value, specifically over the past few days. Now, the S&P 500 has been increasing in value because we're getting a higher possibility of the Federal Reserve cutting interest rates by 0.75% by the end of 2025. So currently the expectation is that we're going to get a 25 basis point rate cut next week. We will get another 25 basis point rate cut at the next meeting, and we will get a third one in December. Now, because we're seeing a possibility now of more frequent interest rate cuts and also consecutive interest rate cuts, it is driving the price of the S&P 500 higher. Now, I'm also taking into consideration specifically the S&P 500 because it is also exposed to Oracle stocks. Oracle is a company which is based in America, is part of the S&P 500, but not part of the Dow Jones and also not part of the NASDAQ. Now, the reason why it's important that it's exposed to Oracle stocks is because Oracle stocks has been the best performing stock of the past 3 months. If we look at its performance just over the past 5 days, it has increased by more than 47%. That's just a single stock, ladies and gentlemen. Now, of course, when we're looking at the upward price movement, it has gained momentum to a certain extent because yesterday's producer inflation was lower than expected. It was actually significantly lower than expected, and that increased the bullish momentum that we have seen on the S&P 500. It actually increased to an all-time high, which is what we can see here. Now, of course, after seeing that all-time high, it did trigger some pending orders. We did see quite a lot of institutions start to take into consideration profit taking, and that triggered only a retracement, so a slight decline, which actually is not something that we've seen so far today. Now, if we're looking at technical analysis, we can definitely see, ladies and gentlemen, that we've very clearly seen consecutive higher highs, and we have this week seen higher lows as well. So we're very clearly forming a Elliott wave pattern upward trend. Now, if we're looking at our technical analysis, we can definitely see that we've got a bullish crossover. We can see we're very clearly trading above our 75 bar EMA and 100 bar SMA as well. That's an indication that buyers are controlling the market and that we're seeing bullish momentum. Now, if we're also looking at the RSI is currently trading close to the 61 mark. Now, if we look at that, the RSI, if it's above 50, it's an indication that, again, there's mainly momentum and a bias towards upward price movement. At the same time, we're not at an area where the price is overbought. Now, here we've got it on a parameter of 18. We can slightly lower the parameter if we wish, ladies and gentlemen, for example, to 14, just to double check and ensure that we're not at an overbought price. And we can indeed see that we're not at that level. If we're looking at a stochastic oscillator, we again have a bullish crossover. If we're looking at the MACD level, we can see we're in the positive area of the MACD, but ideally we want to be trading above this red line, so the signal line. Now, if we're going to get bullish momentum from today's announcement, the CPI announcement, to get bullish momentum, ideally we'll want to see the CPI be weaker than expected. So inflation being lower than expected, because if it's lower than expected, then there is a higher possibility that the Federal Reserve next week will cut 50 basis points and not 25 basis points. And that's positive. If we're following traditional economics, that's positive for the stock market. Currently, the expectation of a 50 basis point rate cut is only 8%, but if we can get a lower CPI, that is potentially likely to significantly increase. So if we do get that outcome and we see bullish price movement, this bar here will definitely move above our signal line. So we will have very clear bullish indications from all signals, including our moving averages, including the crossover, the MACD indication, the RSI, and the stochastic oscillator as well. Now, if we're going to get upward price movement, ladies and gentlemen, we have to be cautious about when the price moves significantly above our all-time high. So the all-time high here, ladies and gentlemen, is here, ladies and gentlemen, which is slightly above the current price movement. So the current price movement is here. So we're looking at 0.25% higher. Now, if we're going to increase double that, ladies and gentlemen, so 0.5% basically. So if the price increases all the way up to here, then we need to be slightly cautious about the price being overbought and potentially forming either a correction or a retracement. However, that's quite a lot of upward price movement. Keep in mind, this is a 2-hour time frame. So for short-term traders, that's quite a lot of upward price movement and a lot of opportunity for us to open potentially multiple trades. So let's go on to a smaller time frame here, ladies and gentlemen. Now, if we're looking at our smaller time frame here, I'm going to draw the Fibonacci retracement levels between our high and our low. So I'm basically measuring the whole retracement. Now, if I'm measuring the whole retracement, we are above the 61% of the retracement being regained. So that's indicating to us, ladies and gentlemen, that indeed we are seeing a scenario that, again, we're getting a bullish indication rather than a neutral indication or a negative indication. If we're looking at the 15-minute time frame, we're also very clearly above the 200-bar simple moving average. That gives us another indication of upward price movement. So if we're going to see, ladies and gentlemen, the price continue to break onto higher highs, which is basically above this level, then we are maintaining indications that potentially the price is going to continue moving upwards. And if we are going to open buy trades at this level, then we can even take into consideration scaling out. So for example, looking at a short-term exit, which maybe is between our entry and the current all-time high, a secondary exit at the all-time high, and then looking to double the distance of this, ladies and gentlemen, as well. So for example, the distance here is 0.20 to look at a third exit at 0.40, so all the way up here at this level here. So we're looking to double that distance. So traders, keep in mind, if you are going to take advantage of upward price movement, it doesn't mean you have to open one trade with one exit. You can open potentially 3 trades and look at one of them being a very quick exit, the second being more of a medium-term exit, and then look at an exit which is at an all-time high slightly further away. So that way we're also able to spread the risk across multiple trades. Now, a lot of traders are going to say to me, what if we get something which is negative for the S&P 500? At which point will we start to take into consideration the price actually declining? Now, there's 2 areas that we can take into consideration where we may switch over to a negative bias, a bearish outlook. Now, the first is if we're going to get a bearish breakout. Now, this is the current low. We can take that into consideration as the point where we start to see and switch over to a negative outlook. So that's one scenario. We can look at the breakout, the bearish breakout, or we can look at the more significant breakout, which is at this point here. The only thing we need to be cautious about is if it's going to decline all the way down to here, ladies and gentlemen, we have to also be cautious that we may see the price slightly retrace before the downward price movement continues, because that's quite a lot of volatility. If we're going to get that much volatility, most likely it may get to a point where the price is temporarily oversold. Alternatively, we can use, which is also a point which is in the middle of the 2 previous points mentioned, the moving average, that if we cross below our 200 bar simple moving average here at this blue line here, if we cross below that, then we can switch over to a negative bias. So ladies and gentlemen, this is the outlook that we're looking at. We definitely need at the moment a lower CPI than that which is currently projected in order to get potentially upward price movement on the S&P 500. We've looked at the technical analysis indications. We've had a lot of indications that the price is going to continue moving higher. Now, if we're also going to look at fundamental analysis, for example, component analysis, if we're looking at the S&P 500 most influential stocks, the top 10 most influential stocks for the S&P 500, which includes large companies such as Nvidia, Microsoft, Apple, Amazon, Alphabet, and so on and so forth, all of those stocks today are increasing in value. Actually, you have to go to the 14th most influential stock to see a stock which is declining for the S&P 500. So we've got very strong indications there of upward price movement from component analysis. In addition to this, if we're looking at the put to call order, the put to call ratio indication, that is also currently declining, which is indicating upward price movement. If we're also looking at the high-low index, that is increasing, which is again giving us a bias of upward price movement for the S&P 500 again. The only thing that we need, ideally, is to see a lower CPI, like we did yesterday for the PPI. So that's it for today, ladies and gentlemen. Hopefully you found today's charts in action educational and informative. In the meantime, though, enjoy the rest of your day. Goodbye.